everyone, this is Peter Schiff, and I'm recording this special video message to bring to your attention a major development in the precious metals market. Now, all summer long, I have been forecasting that the prices of both gold and silver would break out, and I had been urging clients of Euro-Pacific Precious Metals, subscribers to our free newsletter, not to wait until the breakout occurred, but to buy in anticipation of that breakout while prices were lower. I think that opportunity has now passed, but we still have an opportunity to buy now while the breakout is still early in its process. I think the lows are clearly in for both gold and silver, and I think that now that we have broken out, I think the time to buy cheap will soon be gone. And I don't want people who have already hesitated to hesitate any longer and to put off their purchases. If you haven't been paying attention, in the last 3 days, we've had about a $50 increase in the price of gold. We're above $16.50. We're closing in on $16.70. Silver has rallied $3 in 3 days. We're back above $30 an ounce. More importantly, we've eclipsed some overhead resistance that has really been controlling the market all summer long. We were in a bit of a pennant formation where there was a downward trend. We have now blown through that resistance, and the technical picture for both gold and silver could not be brighter. The catalyst for that move, I believe, was the FOMC, the Federal Open Market Committee minutes that came out earlier this week that put QE3, that's quantitative easing, or basically money printing, debt monetization, it put that right back on the table in the minds of a lot of people. Now, in my mind, QE3 was never off the table. I always knew it was a sure thing. It was just a matter of time. But now the Fed came out and surprised a lot of people with its language. It basically said, if we don't get evidence soon of a big pickup in the economy, a sustainable increase in the economy, that the Fed is going to have to take action. And of course, the only tool in its arsenal is to print money and buy bonds and try to goose the economy with the same monetary stimulus that created the problem. In fact, that's how I know that the Fed is going to do QE3. The Fed is saying that if we don't get a quick turnaround in the economy, they're going to do QE3. Well, we're not going to get a turnaround in the economy. In fact, the Fed has made that impossible. As long as the Fed is artificially stimulating the economy with cheap money, it will never recover. Therefore, the Fed is going to have to continuously stimulate it if it's going to stimulate the economy if it doesn't grow, because it can't grow as long as it's stimulating. So it's a self-perpetuating spiral. I've compared it to trying to put out a fire with gasoline, and you're claiming that, well, you're going to pour as much gasoline on the fire as it takes, and until the fire goes out, you're going to keep putting more gasoline on. Well, it's never going to go out because the gasoline only feeds the fire and it gets bigger. Well, that's what happens with our economy. The QE fuels all the malinvestments that underlie the economy and that are preventing it from growing. So as soon as the Fed minutes came out, that's when you saw a big move up in both gold and silver. You also saw a breakdown in the US dollar. Take a look at a chart of the dollar index. You can see we broke below some key levels of support. So not only is the dollar losing purchasing power when measured in terms of gold and silver, but it is losing purchasing power relative to other fiat currencies that are also losing purchasing power, even the euro. Despite all the problems in the Eurozone, the dollar is falling against the euro now. That shows you how dangerous it is and how large the problems that loom here in the United States. Now, the reason I'm recording this video, those of you who didn't buy before the breakout, it's not too late to buy. The prices are not quite as cheap as they were a week ago or a month ago, but I believe they're a lot cheaper than they will be a month from now, 6 months from now. a year from now, as more and more investors realize that the recovery was an illusion, it was simply an artificial high created from stimulus, and that more stimulus is coming, more investors are going to flock to gold. In fact, we found out last week that some of the major investors, such as John Paulson, who made billions shorting subprime mortgages, and George Soros, despite the fact that he was talking about a gold bubble, has now had a change of heart, or maybe he never really believed it was a bubble. He's been buying more gold. Foreign central banks are buying more gold. I think this whole idea that the economy was in recovery and that therefore we weren't going to need more QE, that was one of the reasons that there was a lot of pressure on the price of gold. That line of reasoning has now been challenged, and in fact, a lot of people are rethinking that, and I think people are now starting to build QE3 into their forecasts. In fact, they might as well put QE4 there or QE5. I've been saying we're going to have more QEs than Rocky movies, because I know as long as we're doing QE, we'll never recover, and that guarantees more QE until ultimately the supreme casualty in all this is a complete collapse of the dollar. The real sovereign debt crisis that's coming, the real currency crisis that's coming, is not the one everybody's worried about in Europe, but the one nobody's worried about in the United States. That's why it's important to take this breakout seriously. Don't wait for lower prices. I think if you're waiting for lower prices, you're going to be waiting a long time, and you're probably not going to see them. I think the key is to buy now before the price goes even higher, because what happens is the price goes up, and now you're simply waiting for prices to come back to where they are right now. Well, that might not happen. So I think you want to, if you already own gold and silver, if you were thinking about buying more, don't wait anymore. Just buy it now. Don't worry that it's just moved up, because keep it all in context. Remember, silver got as high as 50 bucks. It's only 30. So it's well off its highs. Gold is still below 1,700. You know, we've got a ways to go just to get back to the highs from last year. And if we're going to take out the inflation-adjusted highs from 1980, that's around 2,300. I think we're going much, much higher than that. Who knows where the top is, but I think we're pretty close to the bottom at this point, and so you don't want to let it get much higher before you buy. The interesting thing about the market reaction to the announcement of QE3, or the increased probability of QE based on the Fed minutes, is that gold reacted positively, but the stock market did not. The market went down on the announcement of QE. Gold went up, also oil went up, and the dollar went down. This is different than the market reaction to prior QE, when stocks also went up. Maybe this is a significant change. Maybe what this means is that the gains from this next round of QE are not necessarily going to be shared by people who are buying stocks, or not U.S. stocks, but maybe the safe haven this time is just going to be precious metals, because precious metals reacted a lot better than stocks. Now, we did get a temporary rise in the bond market, because when traders perceive QE, they know that the Fed is going to come in and buy bonds. And so they want to be able to sell bonds to the Fed, so they buy now. And of course, the Fed buying pushes up the price. But that's just in the short term, because where does the Federal Reserve get the money to do QE3? How does it pay for these bonds? It creates that money out of thin air. It expands the money supply. That's inflation. It creates it. And of course, when the Fed prints money to buy bonds, it destroys the value of the money it's printing, and ultimately the value of those bonds. How long will it be before bond buyers figure out that QE3 is not good for bonds, but it's bad for bonds? Because the biggest enemy of a bond buyer is inflation, and the Fed has to create the inflation to buy the bonds in the first place. And ultimately, the only safe haven from QE And not just quantitative easing in America, but quantitative easing in Europe, quantitative easing in Asia. It's going on all around the world. And investors and savers all around the world are in the same boat, and they're all going to be looking to the same safe haven, and that's going to be gold, it's going to be silver, and I think right now is a great time to buy. As I said, it was a better time a month ago, but you know what? We can look back at these prices. One day, $1,600 gold, $30 silver, it's going to look cheap. Don't wait until that point. Just take action now. I know there were people that got frustrated because gold was going sideways for a while, silver was going sideways. Those are not periods to be frustrated. Those are periods of opportunity. They allow us to accumulate the metal at a better price. I'd rather buy it while it's stable or falling than chasing it on the way up. But you know what? It's just started to move. It's not too late to buy. But don't wait. Believe me, the higher the prices go, the more reluctant people are going to be to buy, and a lot of people might end up going down with a sinking ship. They think they've missed the opportunity. They think the prices are too high. They stay in dollars, and they just ride it down. Because believe me, the lion's share of the damage is in our future. We haven't really had the currency crisis yet. We haven't had the sovereign debt crisis. The worst is not behind us, it's in front of us, and it's time to take action to protect yourself. So why not take the opportunity, if you're already doing business with Euro Pacific Precious Metals, give your representative a call, or if you're not, if you haven't purchased with us before, talk to one of our account specialists. Give us a call. It's 888-GOLD-160, 888-GOLD-160, or just click the link on this video. You can actually schedule an appointment to have a Euro Pacific Precious Metals representative give you a call at your convenience or at a pre-scheduled time to have a discussion about the opportunities today in the precious metals market and to assist you in making your purchase. Thanks for listening, and more importantly, thanks for acting, and thanks in advance for your business.